Hello, everyone. Welcome to another episode with Cuentas Claras con Jerry and Desde Aquí with Pachequín, Manuel Pacheco. Jerry, introduce this topic for those small business owners that probably are worried about the future.
We should all worry about the future. The program we're going to talk about may be new to all of you, but it isn't something new. It is something that is really ingenious from a savings standpoint. It's a way for you, all of us who are sole proprietors or single member LLCs, or maybe you just have one or two partners. Of course, you may want to consider becoming one now. If you're a young individual out there, well, you were talking about it. It makes a lot of sense. If you're young and you're starting out, it might make sense to set up a small enterprise for yourself. Now, talk about what this is. I don't know if everyone is familiar with what is called an individual retirement account. It is something that was set up to help individuals, the key term is individuals, save up for their retirement. Even if you're young, even if you're just starting out and you have a small family and you're not thinking about the future right now, eventually you want to plan for your future. You're going to, grow that family. You want to have some money saved for your future endeavors. So it's a good idea to think about individual retirement account.
I'm glad you're joining me today. For those that don't know me, I spent over 20 years at companies like Kraft Foods, Philip Morris, and 7-Up, learning and managing the financial and operational secrets that drive these large corporations. And for the past 15 years, I've learned to apply those same principles and also adapt and expand to help small businesses like contractors, clinics, bakeries, and others become stronger, more profitable, and use the same winning strategies that I have learned and adapted that the big companies use without the complexity or confusion. So, as every episode, we're going to be talking about how to take control of your cash flow, how to manage taxes, compliance, how to organize your business and operations, and more importantly, how to get results without confusion or complications, which is very important. So whether you're running a family business, a startup, or simply want to learn how to manage your money better, you're in the right place. Let's grow together, one clear conversation at a time. Welcome to Clear Accounts with Jerry.
Now, the beauty of this particular individual retirement account is that it applies to sole proprietors, self-employed individuals. So it's another gift from the IRS to us. What do I mean by that?
What I really like is now we don't need to be worrying about to pay the 100% of our taxes.
That's correct. That's correct. It's exciting, isn't it? It is exciting.
It is.
Who doesn't want to reduce their taxes?
Because everyone is assuming that we need to pay the 100%.
That's correct. Well, here's an opportunity to put money aside for your own future and at the same time save on your income tax return. How is that possible? You say, Manuel. Ask me. How is that possible?
Yes.
How's that possible?
How is that possible? Tell me.
It's the SEP IRA. You can set this up very easily with a bank or anything. And even that, we would love if they contact you, Manuel or us, we can help you do that. Setting it up is easy. It's a mechanism for you to be able to put money away for your own future. At the same time, for your enterprise, reduce your tax impact. It is a win-win for individuals that are working hard and want to put more money away. Now,
what I like about this, the new generation, that they're really looking forward. They're looking to invest. That's what I like about it.
Absolutely.
I know, my generation, I don't want to say my age, but I see now my son and other individuals that I know, they are very worried about the future. Something that I put in my mind every time that you say, it's very easy. And I say, yes, it's just very easy for you. But maybe you can give us a little more steps.
It really is very easy to do.
Okay.
What you have to determine is, this is how easy it is.
Okay.
It's just like opening up a bank account, folks. And how easy is that? All you have to do is have your ID, papers, if you have a small business, you have to show the bank that you're a small business, that you're registered. In our case, we're from the beautiful state of Illinois, that you're registered with the state of Illinois, and you have articles of incorporation and all this other good stuff that we can talk about it, or you can ask us about separately, because if you're sole proprietor or you're a small business, you know what to do. So opening up a bank account is easy if you have all your paperwork. It's the very same thing for an SEP IRA. It's just another bank.
This is gonna sound a little stupid question. There are folks that do cash. It is something that they can do.
As long as you open up an account and you're declaring your cash. See, the key is you're declaring your cash, because the way the SEP IRA works, the calculations or the way you can put money aside is based on how much money you're making. So if you're reporting your income, you can then come up with a percentage of that income to put aside into an IRA. It's a beautiful instrument. Now, even easier, to make it easy, you can put $100. You can start it. You don't have to feed it every day. It's not like it's hungry every day. You can do it as you grow.
Mm-hmm.
Right now, okay, you need the money. We all need money, okay? You and I, we all need money.
Yes.
But if you're making extra money and you don't need that money, let's say you asked about young people. Today, young people can put money away, let it build. There's something called, and now we're getting into a lot of topics, but it's something called compound interest. The beauty of compound interest is that you build on top of, you make money and you build on top of that money and you build on top of that money and you build on top of that money. And before you know it, you've amassed a lot of money.
Mm-hmm.
That's the beauty of what's called compound interest, okay? And you can then set up how you want that money to grow. You can set up your account to be stock only or long-term savings or whatever. But the compound interest is something that grows in the future. That's what those individual retirement accounts do, grow. Now, you as an individual may not have all of that cash available, but you can set it up for $100, $200. Each year you put $3,000, $4,000, $5,000, $3,000, $4,000. You can determine what you're putting in, depending on your business income, into that program.
So you can stop in a year or any month.
You can stop anytime.
Okay.
Now, pulling it out is a different issue. We should talk about that separately, because there's pros and cons.
Yes.
But putting it in, you can stop. You can say, oh, what? Right now, Manuel, I can't.
Right. You committed with a loan or
Exactly.
something.
Manuel, I don't have the cash right now. Do I have to do it? No, you don't have to. Thank you for asking that question. No. You can start it with $100. You can set it up today. Okay? You have to
Or
set
you
it
can lower it to $50 or $25 in case you are
Exactly.
kind of tired for the
Exactly.
next month.
Exactly. Now, we will talk about some of the mechanics, but I think the concept is simple. Very, very simple, people. It's a self-employment mechanism. And the beauty of it is, Manuel, that you can have the option of doing that and your individual retirement accounts. You can set up both. But let's talk about from a self-employment standpoint. Now, there's some cons or some things that I would recommend you consider before you jump into this thing. Okay.
Let's find out, Jerry, what will be the advantage or disadvantages of this program?
Okay. Well, the advantages are you can save money and reduce your taxes.
It's beauty.
It is a beautiful thing.
Yeah.
So let's say, for example, that you want to put away $1,000 or $2,000,
Okay.
and your effective tax rate is 20%.
Okay.
You're putting away $400 that you're saving on your taxes. And the more money you put, the more money, it depends on how big your business is and how much money it's making. You can put away more money and at the same time reduce your taxes based on your effective tax rate. So the government is giving you an incentive to put money away, and you're making money on it off your taxes. So who wants to pay taxes? Tell me, do you want to pay taxes?
Right. Now that you mentioned this, with the years experience, many people sometimes put in cash away to say, this is an excellent opportunity.
Absolutely.
It's besides just pushing cash away, which is not really healthy to do it. It would be better to put in your account, I don't know, saving like $400 a month. You can just do deduction of the $400 a month for your business.
It depends on how your business is doing.
Yes.
And of course, you as an individual, or if you have a good accountant like us, can see how much you're making and you can determine how much you're going to put away.
Mhm.
It's very simple. Even when you set up an account, even if you do with the bank and they love to do these kind of things, if you really got some money considering and you're making money, they were more than happy to help you figure out how much you can put away and all of that stuff. They were more than willing to help because it's money for them. The more money you give them, the more money they have to use. Now,
And they know, the bank also know what is your best season of your business.
exactly.
So it's, it will be easy. Okay, my season is summer.
Right.
Right? Maybe the summer, I will be doing this much. In winter, I will be a little more conservative.
Whatever it is.
Because, okay, different ways. I don't want to assume. I would like to share that because some people maybe it's just connecting right now or looking this video. Don't forget to give us a thumbs up.
Absolutely. Please.
We're doing good. Thank you. It's a little gas for us. Keep going with that analysis, and banks will help you.
Absolutely. Banks will help you.
Your accounting can help you because
We can help you.
Number two, yes.
We can help you. If we know your business activity, we can help you. Okay? That's the beauty of the program. Now, it has some rules, like all things. It's an individual retirement account. So what is that? It's a pre-tax deduction. It's before tax. So in other words, your business made $70,000 and you're putting away 10, you're only reporting 60. You're only paying taxes on the 60. Okay? If you work out the formula, let's not get complicated, but if you were to work out the formula, you are paying only on that 60. Now, you're putting the 10 away. That 10 is tax-free now, but it's not tax-free in the future when you pull it out. As you use it, you pay taxes on it, okay? That is the way it works because it's a pre-tax benefit. It's a deduction on your tax return. So it's giving you extra cash in your pocket in the years, and you said something about young people. When you're young and you need it more, as you're growing and you're developing, you need that extra cash. So the government's giving you the opportunity to take that extra cash from your business as a tax deduction. Okay? Now, when you get older and you're now making less money and you have all these savings, you take it out in strides and you pay taxes at that time.
And I'm pretty sure many people are asking themselves now, how painful will it be when you're taking the money out of there?
It depends on your income tax return. I mean, let's say that you're an older person. Right now, as a younger person, you're making a lot of money, you're active, and you're earning. Maybe you have a family situation, you and your wife, and your wife has got a job, and you're doing, let's say, bakery. Let's go back to my favorite guy, the baking the breads. And you're making money as a baker, and that's your self-employment opportunity. Okay, you were self-employed, and she's making money. Now, you're both making a lot of money, you're paying higher taxes because you're making more money. As you get older, and maybe you retire, and she's no longer working, and maybe you're not doing as many breads as you used to, you're making less money, so your effective tax rate. And if we can get into this in very detail, but your effective tax rate is determined how much money you make. It's as simple as that. So the less money you're making on income basis, the less taxable income that you're taxed. So if you're taking money out, okay, it's going to be at a lower tax rate. It'll be lower tax. So all that money that you've been building and accumulating, and you put in 10,000 over your life, and now it's worth 100,000. It could be that. It could be that. If you're putting it away over a period of time, you can grow 10 to 100,000. That 100,000, you're going to have to pay the taxes on the 90. But you're not going to take it all away at the same time. So as you take it, you pay. But you had the opportunity to make extra income that you might have not done if you're not put it away, if you're not saved, if you're not had thought about, I can make more money in the future.
Okay. That just crossed my mind. Let's say you are elder now, and if you have a family, and unfortunately you pass, how that money can...
Now, that's a different show.
Oh, sorry to get it done.
But an individual retirement account passes on to your spouse. It's not like it disappears. It doesn't disappear, folks.
Okay.
You don't lose the individual retirement account. It doesn't go away.
Okay.
But if you die, unfortunately, you can't collect it anymore. but someone else could take it.
Exactly.
And you have a period of time. Now, we can get into another show about that.
Yeah.
Over a period of time, the IRS allows you to take that money and use it. A lot of people make money and they put it away, and it's good.
Excellent.
Good. Now, disadvantages, you got to be careful because there are rules with regards to these SEPs. One of the rules is that everyone in that company has to participate. If you elect, because it's the company that's electing, it's the company, okay, people, to create this program. If the company elects to create this program, it has to make it available to everybody.
Oh, okay.
So the individual company or the individual, I just have one business, I'm just me. You don't have a problem because it's just you.
Yeah.
Or you have your wife or your aunt or your uncle and you love them and, you know, you're all working beautifully together. You decide to put this program. You all have to participate at the same time.
With different amounts.
The company has to designate this amount of money, and then you have to equally distribute that money based on their income.
Okay. Right.
Based on their income.
Based on their income, based on their decision.
No, it's a decision. It's the company's generating that decision. It's the company that's See,
So we're talking about percentage.
it's stepping back and talking historical. For us older people, for me, I used to work in a corporation many years ago. Pensions were designed by the companies for the employees as to provide some sort of safety net or thank you or whatever. So pension programs are designed by companies. The government said, yes, you as an employer, you, Manol, Incorporated, you have 5,000 employees. You, Manol, you want to give some of the money back to your employees, either through profit sharing or you want to give them a bonus, whatever it is, and you want to put it away for their future. Great. Everybody has to be treated equally based on their income stuff. So that's what the thinking was with regards to this SEP IRA, that the company, you, the individual company, are the ones that are making that decision for the employees. So if you have 100 employees, think about it. Ojo, as we would say in Spanish, ojo, you're going to have to give everybody of those 100 people the same opportunity. You can't say, oh, no, only for me. Can't do that.
Okay, I'm the owner. Let's say my monthly income is $5,000. My assistant is $3,000.
If she's an employee,
And she is an employee.
you would have to provide a pension program for all two of you.
So if I
I don't know the math.
Yes,
It's not
but
going to-
if I decide, in my case, 10%, it have to be 10% for her as well?
Yes.
Yes?
Everybody has to participate equally.
Equal. Okay, that's what it is. It's not an amount.
No, everybody has to be given the opportunity to participate
Right.
equally. So you decide that you're going to take 20% or 15% or
Yes.
whatever
Okay.
it is. You have a maximum. There's a maximum, folks, and we can talk about that at the next show, or we can talk about it later. There's a maximum amount that you can do from the business, but each individual employee has to be given the opportunity. You can't exclude somebody. You can't say, no, my secretary, she don't get it.
Right.
These are the key points. It's available. It's easy to set up. It's based on your income. And beauty of it is that it's a win-win. It's a win for you in terms of money in your pocket that you can put, for things in the future. And at the same time, it reduces your taxes. And who doesn't want to reduce your taxes? It's a tax strategy. As a matter of fact, Manuel, let's introduce it. We want to talk more about tax strategies because it's really important for businesses to know, how can I avoid paying taxes? Not that we don't want to pay taxes. Of course we do.
Yes.
But how can I save and still do it legally? How can I do it in a smart way? How can I do it in a smart way? Well, this is a smart way to do it. If you have the money and you have the ambition, this is a smart way to do it, and you are saving taxes.
That's what we are here. We are here to help people, small business. Right?
Absolutely.
This is our goal. This show about it. This is our idea and what it moved us to share our experience.
Yes, and we thank you for the opportunity that you're giving us to do that.
Oh.
We need to get the
My
word out.
pleasure.
We're going to
Yeah.
start doing more of this.
And we wait for you to participate too. Do you have any question? It's like I say most of the time, it's not a stupid question. I think always gonna find something for every question.
That's correct. I had a professor in college that said, no question is stupid.
It's something that we find out with the margins episode. And I remember that we advise business owners to track their sales if it's possible, do it daily or weekly. And a few minutes ago, going through the conversation, I realized that it could be a really good strategy for those businesses that are considering seriously to get into this type of pension. It will be great to start you looking yourselves weekly or monthly. So maybe in 2 months, you will have an idea how much on your monthly sales you can be maybe saving.
That's an excellent point. The key is know your margins and make sure that your net margins, net profit, look at it, stay on top of it. Like we suggested, if we go back to our episode,
Yes.
listen to that episode and learn about, hey, how do I know how I'm managing my fixed costs and when am I making money? And if you do it on a regular basis, it's an excellent point. If you do it on a regular basis, you're going to be able to know, do I want to use some of that money to reduce my taxes at the same time and put some money away for my own future? It's a good analogy, because this SEP IRA, obviously, not obviously to everybody, but it's obvious that you need to have money in order to put it away, because it's money that you need, because you understand that IRA is a long-term. It's a long-term investment. It's not for short-term. It's a long-term. So it's very important. And I think it fits perfectly with what we talked about, that you need to know if you're making money. You need to know how profitable you are, and if you have that cash. Does your water tank have enough to be able to put maybe a smaller tank aside? A tank that you could put some of that extra water on the side.
Exactly.
Use it for your future. So it's a very good point.
Our audience probably they already watch, or I invite you to watch the water tank episode. The last one that we've been advising to also watch is the break even
That's correct.
in margins.
Excellent.
That episode is kind of describing how you can do the break even for your business every month, and how you understand margins for your prices. And then you go to watch that episode and then come back to this one. It's going to make totally sense.
Yep.
Because once you start finding out how much money you can invest in your future, like a pension, you will be safe. I think it's a very interesting topic today. I'm looking forward to keep feeding with valuable information. I hope you like it. If this makes sense for you, refer to a friend this episode, a family member. Give us a thumbs up.
Yeah.
Notify by YouTube and watch our videos. Okay, we're looking forward to see you.
Thank you for your time. Hope to see you again. Caution, we need to establish these programs before the deadline that the IRS has set up for April 15th of this year, which we're now in February, right?
Yes.
So in order to establish this SEP IRA, if you're interested in doing so, you must set up the account with your bank or whatever investment firm you're talking with before April 15th and contribute to that account by April 15th of 2026 or every April 15th going forward. Mm-hmm. It is something that the IRS allows because they're saying, okay, we're going back in time. You're allowed all of 2025 to put that together based on your formulas, but you must have the account set up by April 15th. If you do not, you don't qualify that year.